Hello, Warriors. Dale Pinkert here at TradeGATEHub.com. Our sponsor is TradeView Markets. So we had a benign inflation report yesterday and today, PPI, and I believe that the market's really leaning into a pause. I think that's still a pretty possible scenario. My strategy was to buy dollar weakness on benign reports, on benign inflation reports, or a Fed pause. I think this will really be a test to see if the 102 level is going to hold in the Dixie. So that's my line in the sand. And we'll see how the dollar right now, people are front running a pause. You could see it here. You could see it in the silver popping 26 cents. You could see it in the gold. You know, if there's a continuation in the gold, I think it's going to have trouble up here at 1980 to 2000. It would be a sell in my view. Aussie's been the star performer, but when I look at the daily here, we're on the verge of cleaning out all the stops from these highs right here. I think we're on the verge of doing it. This high was 68.18, so we're only about 7 pips away. I'm figuring there's a decent short, at least for a pullback in the Aussie. If not, you know, if the dollar really goes, we could still get one more new low in Aussie, but we've had a nice run from 4.5 to 8.5. Why can't we pull back to 6.5 now that all the shorts have capitulated? Well, they're on the verge of doing so anyway. When I look at bonds, it's very important what we're seeing here in notes. And when I look at it from a telescope, to me, it looks like we have, let's use the weekly as our telescope, then we'll break it down with the microscope. Looks like a big descending triangle. Classic TA would say it's a reversal formation. Of course, it doesn't activate until we're under 330. I want to give you guys a little edge on what might be the first level that's going to tell you that we're going to see 330 level, and that's a 360 level. So if you could, you know, just look left here at 360, you'll see how important it was. We based here, we broke out over it, we pulled back to it. Closes over 390 means that yields are going to new highs in my book. But I'll give the formation the benefit of the doubt that we're going to start heading lower and eventually take out 330. And I have to think that that's going to be one of the reasons. Isn't just going to be Fed or soft data, but that parabolic advances in equities could end up running their course for, you know, just like the Aussie at the minimum pullback. Here's your TLT. 104 is the level I need to really get serious about it. I've heard some calls for 98. To me, it's a non-trade. I have a bullish bias because I am looking for risk off, and also the economy beginning to weaken. It started off with claims last week. Crude, I thought we might get one more break down to the 62.5 level. It's acting okay. Maybe this is it. So we could have a pretty good rally if this is going to be the level that holds. We could be back, you know, to 85. If you're long oil or oil-related assets, I think you have to have your line in the sand just a little bit under 67, $3 risk here. But we'll see what happens with oil. I know that the Saudis are certainly trying to get things going on that level. Also want to show why I'm not really turning very bullish on gold and silver right now. Here's the juniors, SILJ. You know, so these could get back to the March lows. Here we go, not quite at March lows, but compared to what silver did, I talked about this prior, that the miners have been underperforming. Even some of the little ones that I like B2 Gold. Orla's another one. Looks like it's sitting right on a cliff at this $4 level. This would actually measure down to $3. if we get a breakdown under 4. Microsoft is not making a new high, and Apple really, even though it's still grinding higher, I still believe we're in a topping formation. Of course, we need closes back under 170, but you could tell compared to S&Ps and NASDAQ, which here's NASDAQ, look at how much stronger the RSI is between that and Apple. Same with the S&Ps, even stronger than the NASDAQ right now, over 80. And we have this throw over. So this has been a month of throwovers. First, we had it in Apple on the earnings report that we had. Then it negated it, and it's still holding. So the throw over is here. So back under the throw over, it's a failed breakout. So under 170, it's a short. S&Ps, throw over yesterday, 43.40-ish or 34. So back inside the formation, and S&Ps back under 43.43. False breakout, momentum breaking with the throw over is negated. And the mother of all throwovers was NASDAQ. It happened all the way down here, and it could fall all the way to 13.6 and just only get back to test the throw over. But I'd be careful with this stuff, especially if you have shares that are not participating with this parabolic move, huge squeeze in equities, reassess them. Looking at things like, what do I want to wrap it with? Let's wrap it with Bitcoin. So Bitcoin just moving sideways, sideways, sideways. Heard an interesting thing from my trader friend Gregor Horvat, who's saying that because of what's happening regulatory wise, they are a lot of people are taking their Bitcoins off the exchange and holding them in wallets, which reduces supply. If they're on the exchange, they're more likely to trade it. So that could be why we're just quiet here. I still think that there's another shoe to drop here. But if we start closing back above 25, I would reassess any shorts that you have at least and just go to flat. And then I just want to touch on the grain market, which I think are in the beginning stages of putting in lows. Here's your wheat. It's going to be down 9. This could be drive 2. Maybe we get one more shot down. Here's corn acting the best. We'll see if this pullback puts in a higher low. And then you have the beans, which rallied pretty good. See if we put in, while wheat's making maybe one more low, that both corn and beans put in higher lows. So look for that, El Grande, El Nino. So good luck with the Fed today, everybody. Join us in the room at TradeGATEHub.com. And Mike and I will see you tomorrow. Adios.